We are studying manufacturing accounts, and this module is about types of inventories. Okay, so we know that there are three types of inventories: material inventory, yes, work in process inventory, and finished goods inventory. So when we say material inventory, material and supplies are covered in that material inventory. So this material and supplies are further subclassified into four categories, which is direct material supplies. This is in fact the raw material, okay? And then indirect material supplies. These direct material supplies, or direct supplies and indirect supplies, together are known as production supplies, okay? Because we use both of these two types of inventories in production, okay? And then there is office supplies. Office supplies means stationery, etc. These supplies we use in our offices for administrative purposes, okay? And then shipping supplies. Shipping supplies are the supplies that we use for packaging, okay? The boxes, the bags in which we pack our finished product. So these shipping supplies are treated as selling expense when these are consumed. Okay. So unconsumed supplies are the inventories. These are assets. Remember, when these supplies will be consumed, will become expense. As we discussed, that cost that expires is expense. So when it is consumed, it is expense. So it will be taken to the expense. Production supplies means direct and indirect supplies of material will be taken to the cost of goods production. Office supplies will be taken to the administrative expenses when consumed. Shipping supplies when consumed would be taken to the selling expense. Got it? Well, the work in process inventory. This is something which we will see in the workshop. So in the workshop, when we are putting all the expenses, all the costs, cost of material, labor, overhead, and when the year ends, so there is a chance that at the closing date or at the end of the reporting period, all of the material put in process was not finished or was not converted by putting labor and overhead into finished goods. So the material that is still in the process of conversion into finished goods is known as work in process. It is also known as semi-finished goods. Okay. So on that date, that semi-finished good or work in process inventory is recognized as an asset. And then on the closing date, at the end of reporting period, there is one more inventory which we see in our assets, in our balance sheet. And that is finished goods inventory. That finished goods inventory is the unsold goods which were finished with us and we could not sell those items during the year. So at the end of the reporting period, we will recognize this unsold finished goods as an inventory, as an asset. Okay. So these are the types of inventory that we will be working out while preparing manufacturing account and trading account of a manufacturing entity. Okay. So the important tips to remember in this module are that stores and spares are indirect supplies. We have some spare parts in our store which we use for repair and maintenance of the plant and machinery. So those stores and spares are indirect supplies. Their consumption means after making adjustment of opening and closing inventory in the purchase of those stores and spares, the consumption will be grouped or included in the factory overhead cost or production overhead cost. Okay. And then cost of consumed supplies, these stores and spares, in FOH is included in FOH by adjusting opening and closing inventory. This is what we have already discussed. So this is all about this module. Very light and easy module to understand. Thank you.